Hello and welcome to Finextra. I'm Thea George and I'm here with Paul Taylor from Bank of America Merrill Lynch. We're at Sibos 2017 in Toronto and we're talking about the latest trends in corporate treasury. Paul, thank you for joining me.
Thank you.
So we hear increasingly that treasurers are more and more involved with the CFO office during mergers and acquisitions. Why is this trend developing and is it working well?
This is definitely a trend that we see. I think for me it's a reflection of the evolution of the role of the treasurer. As companies think about what their priorities are and they think about the projects that they have to undertake, in recent years the treasurer has moved from being a function which was really just involved in the management of cash, the management of working capital, and has moved into a much more strategic, a much more centralized role in the funding of the company, in the financial well-being of the company, and taking a much more active role in projects such as an acquisition, a merger, a divestment, in a way that we wouldn't have seen before, where working capital management, if done correctly, is now seen as an alternative source of funding, an alternative to the traditional routes of going to market, going to the capital markets, debt or equity, raising loans, looking at other alternative funding vehicles. Effective working capital management now is seen as a genuinely attractive method of funding with a much improved cost of capital, a much more healthy dynamic for the organization, and something which ultimately can be managed by the company itself rather than relying on external parties.
So taking a slightly different tack, next year it'll be 10 years of SEPA. Do you think SEPA has achieved its aim of improving cross-border payments efficiency, or do you think we're just scratching the surface of innovation there?
From my perspective, as you said, SEPA will be 10 years old on the 28th of January 2018. And I think we would have to say that it has achieved some of its objectives. As I think about any new payments instrument in the market, or even payments initiative in the market, I always think that there are two phases to full adoption. The first phase is compliance and realization and the ability to go live. As you probably know, Bank of America Merrill Lynch was certified as the first bank to be SEPA ready. And in that sense, compliance was achieved relatively quickly for both the credit transfer and the direct debit instrument. I don't think that readiness or compliance constitutes the full marks in terms of success. And I think the second component, which is probably the most important, is adoption. And in this regard, I think we've seen some of the benefits. Clearly, SEPA volume has risen consistently since 2008 for the credit transfer, 2009 for the direct debit. And that as a function of firstly, its availability, second, its attractiveness versus the cost of the legacy instruments. But I think to really see the full benefit, we've yet to see the way in which business models would change, in which treasuries would change, to realize the full benefit of having a truly cross-border instrument. And I think to that extent, I think that's a function of technology, full adoption of the ISO 20022 XML standard. It's a function of technology from the perspective of ERP and accounting systems catching up and looking at that in a different way. It's a function of the evolution of the people involved in Treasury, looking at these new instruments. And of course, we are about to see, as we've seen at Sibos this week, we're about to see a much broader conversation in the SEPA context about instant or immediate payments. And I think without instant payments, you've not really seen the full potential adoption of SEPA that we might see. So I would say it's definitely been a success. I would say it's achieved many of its objectives, but would I say that we're done? Absolutely not.
So you mentioned instant payments there, huge discussion topic here. Another really big discussion topic is artificial intelligence and robotics. How do you see those technologies impacting treasurers?
I don't think there's a conversation that we have at Sibos this week which doesn't feature some of the buzzwords that have been around our industry for the last 4 or 5 years, and whether that's artificial intelligence, robotics, blockchain, Bitcoin, distributed ledger. These are definitely topics, and I think sometimes there's a risk in talking about these that we're talking about solutions looking for a problem. What we see now, however, is that companies in every sector have much more technologically advanced treasuries. They rely far more on data and data processing systems. partners that they work with, whether they're business counterparties, their suppliers, their clients, the financial institutions that they work with, the government entities that they work with, have an expectation now about the technology that's available. And with that has come a much greater technology literacy and much greater expectation about the potential of artificial intelligence, of robotics, to solve some of the problems. So some good examples would be a lot of companies that we speak to are very concerned, for example, about KYC and about how they can rationalize the KYC process and make it more simple. I think there is an element of artificial intelligence and robotics which can be harnessed to bring benefits there, both on the corporate side and on the banking side. Thinking from a treasury perspective about being able to predict and interpret flows, whether that's working capital flows, whether that's predicting the movements of certain customers and how that's going to impact on the working capital cycle, whether that's being able to extend the working capital cycle. Artificial intelligence and robotics both have a role to play in terms of providing the data that will help them to make better predictions, and in terms of making more efficient the processes that they currently undertake, whether that's physically with a robot, which I don't think in this case we're talking about. I think we're talking more about bots and the way in which programs, robotic programs, can be used to take multi-step processes that would have previously required many people and to rationalize those down to much fewer steps because of the availability of robotic technology.
It's good to cut through the hype and get some reality around AI and robotics. Paul, this has been great. Thank you very much.
Thank you.
And thank you for watching.